Hi guys, and welcome to lesson 2, which is entitled Risk versus Reward. If you guys have missed lesson 1, then I strongly recommend you catch up on that so you understand the process of what we'll be going through today and how to copy people. If you have seen lesson 1, you should already recognise this screen. Now this is the screen that you access when you want to copy someone. There's a few specifications at the top which we can change when we're searching for traders. For example, if we look at the first one, it says people from, and then it's currently set at everywhere. Now, as you can see, I can pick a whole list of different countries. For this one, I recommend you just leave it as everywhere. At the end of the day, if someone's a good trader, it doesn't matter where they're from. If they're going to make you money by copying them, who cares if they're from Afghanistan, United Kingdom, USA, any country. Now, the next one is which market they invest in. Currencies, commodities, indices, etc. The same principle applies with this. If they know what they're doing and they're good at it, they're making money, what difference does it make which market they're investing in? So leave these two exactly how they are. The next category is gained at least, and then you plug in a percentage. Now it's currently set at 10%, but we're going to up this because if you're going to be putting your money into social trading, you want to get a good return from it. There's no point just making 5% in the year from it, because at the end of the day you can make that from other sources. So we're going to change this to 30%, and we're going to have that during the last 12 months, because 12 months, even though 30% in 12 months doesn't actually sound like a lot, for anyone who knows about compound interest, they'll understand that if you start off with £10,000 and for the next 9 years you were to make 30% every single year, you would have over £100,000 by the end of that 9 years, which is quite incredible if you think about it. How many other investments are going to make you £90,000 in 9 years at just 30% each year? So if we were to click go now, we'll see this yields 124 search results. The next thing to look for is the risk score right here. As you can see, this person has a risk score of 5, this person has a risk score of 4, 5 once again. Now, the risk score is basically Etoro has calculated, based on a lot of factors, how risky they think this trader is. This is a very, very important thing to look out for, because you should really be viewing social trading as somewhere to put your investments. You don't want super risky and the potential that someone could lose a lot of the money that you put away. What you want is someone who's going to earn maybe smaller returns, but it's going to be safe and it's going to be consistent. So this right here, this score is the single best indicator. So I usually set that limit for me at 4. I've gone into detail, I've studied the details of what 4 actually means, and it is relatively safe. Anything above that, I simply think that's just too much risk. Now we're going to study one particular trader today. I've found him before because I think he's a good example of someone to look at. So I'm just going to type him in just so I can find it. Not even going to try and pronounce the name, but as you can see, risk score of 3 and a return of 259.24%, which is quite incredible in the last 12 months. He has 17 copiers, and that's increased 750% in the last 7 days. Now, the reason we've chosen to look at him is because he's actually a great example of where people make the mistake in copying. You see those excessive numbers, you see the low risk, and you think, great, he's got to be the guy to copy. But if we actually click on him and we look at some of his information, we'll see that he's barely been trading. He only started in January, in that month he lost 2%. The month after, he made about 2% again. And in March, he made 260%. This is very impressive, but at the end of the day, the fundamental idea of social trading is that we can put our money somewhere and we can just check in maybe once a week, check that our traders are doing well. We want someone who has lots of experience. This guy, he hasn't been doing it long enough. We'd have to check in just about every single day to make sure that he's not being really risky with our money. and to actually make sure that he is the right person to invest with. Now that's just a good example of the sort of things to look out for. So we've covered the specifications you're going to type in. We've discussed the importance of not only compound interest but also the risk score, and we've also covered about how you need to make sure the trader has been trading long enough. So this one hasn't been trading long enough. I would strongly recommend don't put your money with him. In the next lesson we'll be covering more in-depth analysis of all of these stats that I'm going to scroll through right here, and Etoro gives us a lot of different things we can actually study. We can look at the portfolio, the chart, all the different stats in front of us. In the next video we'll break all of this down and we'll make it very simple so you guys can carry out these steps yourself. Or once again, if you don't want to, you can just click through to our final page, see exactly who we're copying with our own money, as we've already done this analysis ourselves. But hopefully you guys do choose to follow along and understand the process, and if you do, we look forward to seeing you in the next video.